So basically, see, I think you're going to see a very volatile market. I think markets are now going to be dictated purely by electoral trends. And I think my sense is that we could see a lot of volatility considering the kind of wicks we saw yesterday. Typically, in the month just ahead of the election result, I would be a little cautious in entering any stock in a very relatively big way. But I think if we at all get some further downside, then I think one could start nimbling into the large cap names. Some names like ICICI Bank, Axis Bank, or typically even the PSU banks like typically a Bank of Baroda. My sense is that these offer a lot of long-term value, and I think once the election result is out, we should definitely see a strong bounce. But it all depends on the margin of victory. I think the markets are now discounting the number of 400, possibly a figure of 350 to 370 if it does come in. I think the markets could definitely see a decent amount of re-rating. So I think this is a time where one has to take a calculated risk and actually bet on the large caps. We would stay away from the mid caps. Tamanna, if you look at the BPCL numbers, there has been a big exceptional gain of almost 1600 to 1700 crores. So if you strip it off, I think numbers have been largely in line, but I think not very strong in that sense. The bonus issue is a surprise because their comparable peer HPCL has given a 1:2 bonus. So I think the bonus has been more lucrative. But I think going forward, hopefully, if crude prices remain soft, and considering that now the Iraq-Israel issue is more or less cooled off, I would not be surprised that in the coming year GRMs could improve. And I think you're seeing a lot of good demand from sectors like automotive, aviation. So I think to that extent, I think definitely it looks a decent bet if one were to look at the next 6 to 12 months. But yes, I think numbers were not very impressive. I think in line, and largely because of the exceptional gain, you saw a big jump in the profit. My sense is, Neeraj, it's better to wait for a couple of quarters because competition in the paint market has intensified. In fact, now there are two or three new players. And looking at the recent entrant, that is Grasim, I think my sense is that some sort of price damage in terms of margins has already started getting realized on Asian Paints numbers. But I think you will probably see a bigger impact in the first half of financial year FY 24-25. So I won't be surprised that the stock could possibly continue to remain under pressure because clearly the markets are now looking at the fact that in what way is Asian Paints going to defend its market share and obviously preserve its margins. So on one side, crude prices have softened, but I think on the other hand, competition has intensified. So I think at best it can be a hold. We would not suggest a fresh buy at the current levels. See, if you ask me on Tata Motors, I think the company has now decided to separate both the automotive commercial vehicle and the passenger car business. This remains the key trigger. And I think as far as the JLR business is concerned, Samira, I think we are going to see a better traction on both the volumes as well as the margins. In fact, the company has maintained that it should obviously generate free cash flow, which is a very important variable for them. And going forward, I think the demerger trigger is going to play out. In fact, yesterday there was some news saying that even the NBFC business is now going to be transferred to Tata Capital. So that also obviously would mean that the company gets more focused on its business entities. So as best, I think we'll prefer to wait for the numbers. But yes, at around 1,000 or just below 1,000, one could definitely look at accumulating it. We feel automotive is one sector which should do remarkably well in FY 24. I think I would bet on the hospitality sector. I think we like companies like Indian Hotels, East India Hotels. I think these are fairly defensive bets and with good earnings growth, potential possibilities for the coming year also. And I think within the auto component space also, we like one or two companies like Sundram Fasteners, Ask Automotives. These are companies which have been beaten down, and I think a good recovery in basically the two-wheeler markets is going to be something which would benefit Ask Auto quite significantly. In fact, Sundram Fasteners would benefit from a large commercial vehicle and passenger car kind of volume growth expansion in the current year. So I think hotels would be a top pick, and I think Indian Hotels, East India Hotels, even at the current levels, an investor can expect a decent risk.